once we break all-time highs this year after such a long consolidation, going from 69,000 to 100,000, it's barely 50% gain. That's nothing for Bitcoin.
Is Bitcoin set for a massive rally? Is this a bear market? What should people expect for the rest of the year?
The price will go up. It's just a matter of time for the market to effectively value this adoption curve. And that takes time, and the market's very irrational in the short term, so you get ups and downs.
This is pretty much the fastest adoption of a technology in human history.
I know, it's like, I don't think anyone really sees what's happening right now and its full consequences. Like, we can only guess, but it's like safely above 2% of the world owning this asset. So figure that out. A year later, 4%, a year later, 8% a year later, we're above 1/8 of the world holding this asset class. 1/2 of the world in 4 or 5 years.
Everybody gets in a comfort zone, even if you're an entrepreneur and a this and a that. So you have to push yourself out of your own zone, which will always be uncomfortable.
Do everything you're scared of. If you've got like A or B, you can't pick between, just do the one that's most scary. And it's not even A or B, it's like, those guys are really scary. Go and talk to them and spend time with them. That way of living is really scary. Go live that way. Just do it. Push the envelope. Do more of that. Live more, If you live that way, it's a dream.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Willy Woo, the crypto pioneer, analyst, investor, and technologist. You are the author of the Bitcoin Forecast newsletter, where you offer subscribers the latest Bitcoin price trend predictions and macro analysis of the cryptocurrency market. With over 700,000 investors following your insights, you have become one of the most influential commentators in the space. In 2021, Cointelegraph named you as one of their top 100 figures in the blockchain industry. You believe that Bitcoin will experience a big rally in the first quarter of this year and feel confident it will reach $100,000 at some point in 2022. Willy, welcome to London Real.
Thank you, Brian. It's a pleasure to be here.
Willy, it's great having you here. It's nice to know that you're a fan of our interior design as well, and some of our chairs here that you have over there as well. Willy, I'm super excited to talk to you. I spent 15 years on Wall Street in the city of London here, and quite honestly, I don't know if I've ever heard anybody speak as intelligently about the financial markets as you, not to mention blockchain. So I'm really excited to talk to you today. I want to talk about your whole journey in this space since 2013, maybe how the fundamentals of this market have intrinsically changed and what you do with on-chain analysis. But before we get to that, Willy, maybe we should talk about the elephant in the room, which everyone's asking you right now, and I guess maybe we can address to get it out of the way. Is Bitcoin set for a massive rally? Is this a bear market? What should people expect for the rest of the year?
Well, it's at the start of the year. We've come out of a very, very soft December where we've got a lot of institutions selling down, taking their profits. And that has caused the price to come down substantially in a very weak kind of month where there's not a lot of liquidity in the market. But overall, if you were to look at who holds the coins, they're held by relatively strong holders. And it's very cyclical. The coins move from people who have held it for a long time to a whole bunch of new people. And we're now in this kind of peak where the long-term holders have most of the coins. So usually they don't want to sell, right? They're not going to sell until, there's some profit to be made. So, in a typical structure like this, you kind of expect once the sort of consolidation that we're in, we've been sideways chopped for quite a long time. Once that sort of completes, we can expect price to go higher, just because so many coins are held by the guys that are not selling until they realize profit. So it's a pretty strong structure right now, even though the market's in, short-term fear because it's come down from, what is it, 69,000 to now like as low as 39,000. But that for Bitcoin is, the typical volatility. Long-term in the macro sense of this market, we're still in a bull rally, or bull structure at least. So yeah, it should be a good year.
And did I quote you right as you thinking that, we could still hit that $100,000 this year? I mean, maybe not Q1 or Q2, but it's still something that you see in your analysis?
Yeah, I think it's very, very possible. All we need to do is break the kind of all-time highs around the high 60s, and then it moves, because we've been consolidating around or below the high 60s for, wow, it's been almost a good part of a year. So when you have that amount of time agreeing the price is solid around the, I think it's a $1 trillion valuation for this market. It's very healthy, right? It's like a lot of price discovery at the 50,000 plus range, which values Bitcoin at $1 trillion. So, once that's agreed on for a long time and we break higher, usually it does a step change up. We had that in tail end of 2020. So you see Bitcoin does these sort of huge rallies, and then it sort of waits around for a while to consolidate. And so, yeah, I think once we break all-time highs this year after such a long consolidation, going from 69,000 to 100,000, it's barely 50% gain. That's nothing for Bitcoin.
Yeah, that's really good analysis. Willy, talk to me about what you just said, is in that maybe there's something healthy about this consolidation. I have like over 500 students in my DeFi Academy, and they're always saying like, why does it have to come off, and why does there have to be this much pain? And sometimes I have that discussion that, this is a sign of actually building support levels, of finding out where people are in and out of trades, and that maybe without even some of this consolidation, we wouldn't see the 100K price, or we wouldn't see it last as long as it does. Mm-hmm. Do you agree with that sentiment, or how do you explain to kind of people that concept?
Yeah, because when you think about the market, you've got it's a menagerie of animals, right? You've got the long-term holders, like maybe Michael Saylor, who's stacking this coin for his company for the next 100 years, right? So every coin he buys, that kind of person is not going to sell. So you've got the hardcore long-term investors, the medium-term investors, and then you've got the short-term investors. And then you've got these different types of people, like people who are new and don't understand it, and others that are really solid in their understanding and their investment in this market. And so whenever the price rallies, you're going to have, like, for starters, the guys that are new to it are going to go, I've never seen profits like this, I'm taking profit, and they sell. And as the thing starts to sell down, like, people get scared, and a lot of the newer guys will like get shaken out of the market. So every time we go downwards, we're testing the lows, and we're effectively shaking out, we call it weak hands, but basically the guys that get freaked out. And so at every price level, you've got to consolidate and make sure the people that are holding this asset are long-term solid investors, and the guys that are going to sell on the earliest sort of profit or the earliest signs of loss, they have to be shaken out of the market. And so, that's why you get these step changes. You go up, you shake out the traders, you shake out the short-term guys, the guys that are new to the market, and even they learn over a long kind of period of time being in the market that this kind of volatility within this emerging asset class is very normal. So you don't get up forever, right? You have to always test those highs with new lows, well, usually a higher low, hopefully. So we need time for the market to settle on the price. And furthermore, like underlying this, it's just more and more money is coming into the market. And if you think of Bitcoin as like this bucket, right? It's a bucket that people still value in, like equities or real estate, but it's a special one in that it's storing value online, so it's internet programmable and it can be transmitted borderlessly. It's a kind of new asset class. And so everything like this, where you're getting adoption, and the internet has seen a huge adoption, right? It's created an adoption S-curve. Bitcoin's the same, right? We're doing an adoption S-curve. So it roughly doubles every year. It has been doubling every year in terms of the number of people that are exposed to this asset. And it's been doing that for like 13 years. So we're in exponential growth, at least in the number of people holding it. And so the price will go up. It's just a matter of time for the market to effectively value this adoption curve. And that takes time, and the market's very irrational in the short term. So you get ups and downs. Like we can talk about how things are changing in the market. So it's becoming a lot more complex, and you're starting to see a little bit more volatility than you would have normally expected just by the way the market works now.
Yeah, and I want to talk about some of that in the on-chain analysis. I mean, you just basically said we're experiencing doubling of growth every year in a piece of technology. That's exponential growth. This is pretty much the fastest adoption of a technology in human history, right? It actually even dwarfs internet and mobile phone adoption. And it's something, is that correct? And it's also something that us as humans, we really can't process that, can we?
I know, it's like, I don't think anyone really sees what's happening right now and its full consequences. Like, we can only guess, but it's like safely above 2% of the world own this asset. So figure that out. A year later, 4%, a year later, 8%, a year later, we're above 1/8 of the world holding this asset class, 1/2 of the world in 4 or 5 years, right? I do expect that to taper because it can't double beyond the population of the planet. But that's what you see. The exponential curve goes up and then it does an S, right? And it tapers off. So, put that in perspective, the rate at it's climbing, the store of value in this asset class is going to rival the US dollar M2 money supply. It's on track to potentially get much higher than that. And so that's geopolitical, it's geopolitical. It's like nation states are founded on, funded, not founded, but funded by two sources of income. One is the taxes that's levied on the people and the companies. And the other one is the ability to, create the hidden tax, which is to print more money to fund the system. And so, like, when you have this currency that is borderless and is one of the challenges to a reserve currency. We are now having the very first of the small, like say El Salvador holding reserves in this currency. It's kind of removing one of the pillars of funding a nation. It's a very interesting time. I don't know exactly where it will take us, but this combined with the ability to build businesses online, we've got money that punches right through national barriers. They're not showing any allegiance to any nation state. It exists on the internet. Wow, that's like a complete, it's a story out of a sci-fi novel. And I don't know what that's going to be, but like, I kind of think that we keep talking about like, what is the next superpower? Is China going to be the next superpower? We talk about the yuan, we talk about the US dollar, but I don't think many people talk about, hey, what if we're moving into a new time? What if this is really the digital revolution really is as profound as the industrial revolution or the agrarian revolution, and every one of those revolutions was a power structure change from hunter-gatherers to our first kingdoms, in a feudal system, to an industrial kind of world which dictated nation-state power structures. And if this is as profound as those big revolutions, nation states aren't going to be around in the same form as they are now. And we're going to move into a new kind of governance and a new kind of power structure. And the rate of which Bitcoin is growing, this online money, which is kind of the final leg in the stool of the internet. We never had an online money before.
Yeah.
That completes this digital revolution. And so I think it's very, very profound. I haven't really met many people talking about what that actually means, because I think a lot of the conversations we have about the future is kind of a projection of the past, regulations, for example, regulations at nation state level. How are they going to regulate the new DeFi stuff, or cryptocurrencies? But the rate at which this is growing, I'm like going, are we going to have nation states? I'm flipping it, It's an unpredictable time, and it's incredibly exciting to be in this industry, to be at the forefront of seeing. I don't know what's going to happen, but it's going to be interesting.
Do you think this is the most exciting time to be alive as a human ever?
I think so. I think it's always the most, if I was born in the near, kind of the caveman times, my life would have been the same as it was 100,000 years ago. Whereas every sort of decade is profoundly different from the prior right now.
Yeah.
So it is.
It's important to think about, like you said, some of these concepts in the future. And I guess as humans, we always view the future through the lens of a past, and we kind of project out. And it's of course never the case. Not to mention throw in exponential growth of something, and it all goes out the window. But if you look at even a few hundred years ago, Willy, the nation state in Europe didn't really exist. I mean, how long has Germany been a country? Italy been a country? I was doing what the Queen and King told me to do here a couple hundred years ago. And so even the concept of a nation state is newer than we think. You mentioned the Industrial Revolution, which I'll take credit for here in the UK. But Dan Tapiero from 10T Holdings with me, and he said, Brian, Bitcoin's a bit like the steam engine. It's this piece of technology that, you can't put the genie back in the bottle. It fundamentally changed our entire human experience. It was also democratized. Anybody could build a steam engine anywhere. And as you alluded to, it actually redistributed wealth and power structures all around the world. Now we've got this digital money, as you said, almost the completion of what we always hoped the internet would be. What does that mean, like you said, for our power structures? And again, this is stuff we talk about a lot on this show. You fundamentally look at how does a nation state stay in control. It's ultimately about the money. I mean, there's laws, but they control people with money, and the people don't even know they're being controlled by that money. So this future you're talking about, it's sometimes hard to put in perspective because everybody's worried about the price of this and the latest coin and the DeFi protocols, which is all very interesting. But like you said, you take a step back and look to what the future would be. It can be a very different planet in the next 20, 30 years because of Bitcoin and blockchain.
Yeah, and it is absolutely unpredictable. I think we don't really have a handle on this. And, I like this metaphor because people say, what do you think, what are the apps they're going to be built on Bitcoin or you know, Ethereum or any of these DeFi networks. And you know, we're seeing remittances, we're seeing lending, we're seeing very much like the kind of finance we see um, on in the financial world that's traditional, but brought onto a digital landscape. And it really just reminds me of the internet transition and the TV transition and all these transitions. It was like something I remember listening to a Steve Jobs, you know, interview, and he was asked about like, where do you see computers moving to? What is this? This is a new form of media. And he said that, like, if you look at TV, when we invented it, the first thing we put on TV was radio, effectively a radio show with pictures.
Yeah.
And it took 20 years to create the sitcom. And he said at the start of the computer age for the masses, he said, you know, these Apple computers, they're going to be connected together. It's a new form of media. And I don't know what it'll produce. It'll take 20 years. He said this in the 90s. It'll take 20 years for us to figure out the medium for the web. And, you know, that turned out to be social media, but that was not known about at the time these computers being made. And so we're making crypto networks now. We're making Bitcoin. We're making DeFi networks, and we're putting on radio with pictures. You know, lending. This is like remittance. So the same sort of stuff that savings. You know, the same sort of stuff that we do in the traditional space. But it'll take you know, 2 decades from its inception to find its form. If history tells us, you know, it's going to repeat. And we're kind of halfway there now. We're starting to see some pretty interesting stuff in the NFT world, seeing stuff like in the gaming world. And I think these experiments are interesting because they're leading us to non-obvious answers that we couldn't have dreamed of, like perhaps like 10 years ago. And I think, yeah, we don't know yet. Like that's an interesting point around this innovation, how things are moving forward, is that it's one step leads to the next, but we're not sure what the next step will be.
Yeah, there's a famous futurist named Marshall McLuhan. I'm sure you've heard of his stuff, and he has a concept called the medium is the message. And if anybody is familiar with this or not, I'll try to briefly explain it. And he basically says every time you introduce a new medium, it's actually the message embodied in that medium. And yet our first version is to copy the old medium. So like you said, when we went from radio to television, we tried to kind of reproduce that old media on this new medium. And we said, okay, television is going to be like movies in your house. Now, fast forward 20 years and television became a member of the family on 24 hours a day, our news source, our fun source. You know, we make love to the television. We cry to the television. In The Simpsons, Maggie Simpson is hugging the television, right? Because it's a new medium. Now, fast forward to the internet, we looked at YouTube and it's like, oh, YouTube is just videos online. Wrong, right? 10 years ago, I started a YouTube channel, and that interactivity literally changed the course of my life because it was, like you said, social media, engagement, direct feedback. It was definitely not movies, TV on demand. It was like a whole nother social structure, like you said. And the medium, again, is the message. Look at the medium as opposed to the message itself. Now, fast forward to Bitcoin or blockchain, you know, value transfer. This is a whole new medium. And like you said, what we traditionally do as humans is we take the old version and stick it on that. So like you said, borrowing and lending, which we've been doing since the Medici age, now we stick it on the blockchain. And like you said, that's what we do as humans. But the future lies in some iteration that we can't even conceive of. And we see little snippets of that with the NFT explosions, right? And these other things where we're like, oh, wow, I didn't know that there was value there. And then you see it. But just curious, your thoughts on that concept of the medium. And then it's hard for people to kind of understand that, right? It's quite a philosophical concept.
Yeah, it kind of reminds me of like when the internet came out, the network is the computer. Yeah, I don't have much more thoughts of that. I'm just like sitting on the sidelines going, what's next? Because this is really interesting stuff. And you don't know how it works. Like, it's very hard to sit here and think where we're going to go in the next 10 years. Like, because really it's an exploration of this medium, right? And I mean, I was around from the web age going into social media, and we were like building. Initially I would write newsletters back home when I was traveling, and I was like, oh, I'll build a website so that like I was actually like sending it from a little Palm Pilot, and it would upload and send to my friends, and then later I built a website that would upload it to the website, and the website would relay it to friends, and it would publish it on the website. And then that was actually the first form of a blog. And and we didn't know there were blogs at the time. Everyone's creating home pages, and then we started automating it, and then we started connecting these blogs together and making comments on each other's blogs. And that was like the first stage of social media. Then along came, it was the next step, right, to do a MySpace and a Facebook, which was to amalgamate it in one spot. And I think that progression applies to Bitcoin itself, right? It's or crypto, we should say. We build stuff, and then we try experiments, and then it's a conversation. Like, it's a conversation between the developers that are building the stuff and the guys that are using it. And the innovation is not just some smart team that decides they're going to build some sort of app and then they get traction or not. It's usually they build something, it gets traction, and then there's a conversation with its user base, and then a behavioral pattern happens, which we never knew before, because we never talked on this medium, and we're exploring it. And then the next thing jumps along, and it's very sort of iterative. And I guess it's a conversation. It's a conversation with technology and the different parts of the user base.
I like that word, a conversation. And maybe that's what Web 3.0 is. When people think about Web 2.0, there's that famous Steve Jobs line where they say, where he said, I think, the customer will know what they want when I give it to them, right? There was like,
right.
These, leaders that would actually create the product and then deliver it, and then the consumers would know they want it. I feel like that's a little bit of the Web old 2.0 world, where you had, a few highly capitalized companies that owned all the value, that, to a certain extent would choose what they're going to develop. Whereas with Web 3.0, like you said, I mean, it's much more of a conversation. I've had people like Stanley Kulichev here in my studio, and I'm like, Stanley, what's next for Aave? And he's like, Brian, I don't know. My job is to come to work every day and build the best code possible so my community uses it in a creative way that I don't even know what they're going to do with it. I'm not, the Steve Jobs guy telling where this is going to go. I'm here, like you said, almost having a conversation. And I feel like that's the future of 3.0. I don't know if everyone's going to be comfortable embracing that, because it's not what we've been doing the last couple of 100 years in capitalism, but it feels like that's where we're going.
Well, it's, I can understand Steve Jobs thing with like, that's predicated on the technology to do this, to deliver, say, an iPhone is really, really quite hard. And the consumers don't know that what is possible or what isn't. So usually there's that, I'll deliver this groundbreaking thing, and then you'll know you want it. But once you get over that, right, say an iPhone comes out, and then there's this whole platform which people can have that conversation and build apps and do that. And Bitcoin's the same. Like, it took Sitoshi Nakamoto to figure out we can put this money online. And then now the conversation's happening, and like the conversation bit's the most exciting bit, right? That's the world-changing bit, that you get non-obvious answers that absolutely change the world. Beyond just like, here's a peer-to-peer payment system that, and its outset is really just repeating what we've got in the physical world, but putting it into the digital world. It's kind of that copy, right? But
Yeah,
incredibly important.
And then now that it's out there, you're right, now it can be developed and iterated and expanded.
Exactly.
I don't know why this just came to my head, but I got to ask you, like, who is Satoshi? Does it matter? Will those Bitcoin ever move? But if anyone I should ask is probably you, Willy.
Well, it's curiosity to know. I don't think it really matters too much. It does matter if this person is alive and he's going to sell all his coins. I kind of think that out of all of the candidates, Hal Finney is probably the one that that's most likely if it's any of these candidates, just because he passed and the timing is somewhat around the same time, and like it's just really hard for a founder who has gone down the rabbit hole and spent so many years of his life to build something to just walk away from it. And like he says, I'm going on to other things. To me, it sounded like, he might not have long to live. Like if you're a startup guy, and I've done startups before, but you're doing something like that, that impressive and is getting traction, you don't walk away from that. It's like the most exciting time. So, I think maybe it was Hal Finney, if it is anyone on the candidates list.
Right. And
it probably doesn't matter.
And he's now dead, and that would explain some of the behavior, because like you said, it would take an incredibly disciplined person to not talk about it, not claim it, not move the Bitcoin. And like you said, by definition, the person that created this is the type of person who isn't that person, right? It's not a Navy SEAL, it's not a Stoic, it's not a monk on a mountain somewhere. So in your opinion, the behavior seems to correlate with someone who's no longer with us.
Yeah, and he did claim some coins, right? He mined substantial amounts, which he's passed on to his kids now, and they're very well off. So, there's a stack that was mined by some guy that we don't know who it is, Satoshi, and there's another stack by Hal Finney, and it could be the same person. Obviously, the first bunch of coins didn't take a lot of compute because there wasn't a lot of people to compete for that mining, and it was really there just to support the network's operation. It kind of makes sense anyway.
How many Bitcoin does Satoshi or the founder hold right now? And
about 1 million. It's about 1 million. It's about 5% of the entire fully diluted coin count, but more if you consider like 3.7 million of the coins have already been lost. 1 million is Satoshi's, which we count as being lost. So, yeah. So
1 million for Satoshi, another 3.7 million that are lost.
2.7 in addition from others. So the actual full number of coins that will be on the network that are still living and can be moved is it's going to be around 17 million. So that's a real supply, not 21.
Yeah. Well, and this is a perfect segue into what you actually do, Willy. And maybe we can explain it to people that might not even understand what on-chain analysis is. But, when I worked on Wall Street in the 90s, the reason we made a lot of money is because what Gary Gensler calls the asymmetry of information, right? Mm-hmm. The reason a lot of industries existed is because you controlled the information flow. So when I was on Wall Street, we would do trades all day, off-balance sheet derivatives trades, swaps, exotic options, and other things, even treasury trades. And the rule was you don't ever tell anyone about it. Like you never talk about your trades. Like it got to be such a bad point, Willy, where I would not even want to tell the Starbucks person my coffee order because I was so used to secrecy, right? Because, by controlling the information, it meant that nobody knew what you were doing. And therefore, you could kind of take advantage of knowing things other people didn't know. And so especially in the derivatives market, where everything's off balance sheet, there's no futures exchange, there's no way to track it. And that was traditionally how a lot of financial markets operated. Fast forward to this incredible innovation with the blockchain, quite literally, everything is public and trackable. To such an extent, I think sometimes people forget that in not only Bitcoin, but other DeFi protocols. I had a hot wallet person in here the other day, and he's like, you know, when you plug in with MetaMask, we see everything. And it was just a reminder. And it's a reminder of what you do, Willy. I mean, you literally track the flows of all those 17 million Bitcoin, what they're doing, how they're behaving, where they are, how frequently they're trading. Maybe you could explain to people just the fact that that's a massive innovation, what it shows you, downsides, upsides.
Yeah, it's a very unique field in finance that only pertains to blockchain assets, particularly Bitcoin, because Bitcoin's the largest, most organic network. So when you get data from this blockchain, it's millions and millions and millions of people using it. And so you'll find that the data is more organic and predictable. And you know, effectively, you know, there's many ways you can use this blockchain data. You can use it, for example, for some of the stuff we've already talked about the adoption rate. How quickly is this asset growing? How many more users are coming on board? You know, you can forensically cluster all of the addresses that hold Bitcoin together into what looks like individuals managing their account. And so you can count the growth of those accounts and seeing how many new users are coming on. You can track which ones are exchanges, custody providers, miners. So there's the whole ecosystem becomes resolved. And some of the things that we do for forecasting is look at, like, you know, what I like the most is look at demand and supply on chain. And what I mean by that is you've got many different types of investors, and you know, it turns out you can look at the behavioral kind of investment activity they've done in the past, and you can kind of make predictions based on that. So for example, where I said like a lot of the long-term holders have had holding most of the coins right now, that's a behavioral pattern. The coins have moved to people that are holding for more than 5 months. They have a very good majority share. We know probabilistically that people who have held their coins for longer than 5 months have a steep drop off in their like probability that they'll sell in any one day. So that means that the demand is quite high in a macro sense compared to the supply, because those guys aren't selling. And you can even go down into the individual cohorts of investors. You've got the guys that continue to stack, the guys that stack, but they somewhat times trade, and the other guys that always zero out. They buy and they sell. And so there are different behaviors, and you can sort of draw a demand and supply like chart on it, and it turns out it's quite predictive on the price. So that's one way. You can look at, you know, what do people pay for their coins across the whole market. You know, all these sort of interesting analysis you can do on chain. And so when we look at, you know, say Wall Street, and we look at equities, we might have a price earnings ratio. And, you know, there's a few people that think Bitcoin's just a speculative asset with no fundamentals, but actually these are the fundamentals. The first on-chain signal I created was one of the very first full stop, was called NVT. And NVT measures the ratio of Bitcoin's valuation compared to the volume, effectively the investment activity happening within that blockchain. Like the volume is very much an indicator of one investor moving coins to another investor. So that's a new investor coming in and buying. So whenever you got a high valuation to very little investor volume, it's like the high PE ratio, overvaluing that share for very little, you know, earnings in that stock. And then you get these other times where it's huge amount of investment activity and the price hasn't rallied, you know, the valuation hasn't increased. So it became a very good indicator for looking for undervaluation or overvaluation. So let's just give you an idea of what we do on the blockchain. We look at what is happening between the investors, and we try and compare that to what's happening with the market price. So sometimes the market's out, like completely missing the point of what the fundamental investors are doing.
And so by monitoring like the NVT, you can kind of see when things kind of look cheap or look expensive, and over long enough cycles, you find your model's quite predictable until something shocks it. But otherwise, it's shockingly predictable for you. I know you're a mechanical engineer like me, and you've probably seen something that holds up.
Yeah, and you can get to this analysis where like, wow, this is really interesting. The prices, like for example, in 2019 to 2020, the price was chopping around sideways for $10,000 at $10,000 for a very long time. And meanwhile, coins were being scooped up off the exchanges, and they were being piled into the hands of you know, the hodlers. They were not selling; they were just buying and buying and buying. Turned out later that was MicroStrategy and Michael Saylor and his cohort, and many other high net worth people were stacking this coin. Meanwhile, the discussion was, we've just had the COVID crash, Bitcoin's moving up and down with equities, gold was starting to look strong, and people were saying it was a failed safe haven. It's you know, like, and meanwhile the buying activity was there. It was absolutely there. And I wrote this article that said, look, this whole thing's going to decouple from equities, because you know, using one of them valuation metrics I was using, it was like a derivative of NVT to provide effectively a price point of where the fundamental investors were valuing it. You kind of have this valuation of where the fundamental investors will step in and buy, and then almost a speculative premium that's chopping and going all over the place. So this speculative premium was chopping all over the place in correlations to equities, but that floor was coming up and up and up. And I was like, oh, this is going to get squeezed out. I'm going to get a squeeze, and we're going to decouple completely. And at a certain point, equities went down, Bitcoin just rallied, and then we kind of entered into the tail end of 2020, and you know, it went 5x in a matter of a short few months.
What does that feel like?
You could see that coming. You know, you could see it coming.
Yeah. What does that feel like, Willy, when you can actually see something coming? You're looking at the numbers. You step back and do first principles and say, okay, am I crazy? No, I'm not crazy. Then you put an article about it, and then you watch it actually manifest. What does that feel like?
You know, it's mixed, you know, because I've been doing it a while. But because I'm putting a lot of the stuff out, sometimes it's actually relief. But, you know, it's also, you know, very, very satisfying, and often very, very profitable. So it's usually good vibes all around, relief, like fun, and, you know, everyone loves a rally. So yeah, and I think I remember in the 2018 bear market, I was using the same sort of on-chain stuff to say, look, we haven't bottomed. And you know, while everyone was in pain, I had the fortune of going, at least I'm building reputation here as it's crashing. You know, it wasn't fun for all of us to see the asset class drop, but you know, at least it wasn't all lost. And so, you know, it's I guess it's satisfying, I guess, that particularly again, you know, because we're in a conversation world with social media. So once you put stuff out and it's enjoyable to create content and engage with people, you also put yourself on the line there. If you're going to do anything of value, it's got to be falsifiable. So you put stuff out there, and if you're wrong, you're wrong. It's always nice to get it right. So yeah.
Yeah, let's talk about that, because you have a massive presence on Twitter. Everybody should follow you. You got a pinned post up there that compares, I think, where we are now to like 1997 in the internet, and in 4 years from now we'll be like 2005 in the internet. But like, you're active on Twitter, Willy, and how important is that conversation there?
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.